In this video, I'm going to show you how the accounting equation works. The accounting equation is a very important concept in financial accounting. Although many people do not approach financial accounting because they associate the accounting equation with math, and therefore they think that the accounting equation is something very complicated when it is not. Therefore, I want to burst this myth in this video. I want to show you how simple of a concept is the accounting equation on one hand, and then on the other hand I want to show you how important is the accounting equation, since it's going to help us to build the balance sheet that is one of the main financial statements that allows us to see the risk of any organization. Having said that, let me show you the accounting equation here on the whiteboard. As you can see, the accounting equation states that A equals L plus E, where A stands for assets, L stands for liability, and E stands for equity. Now, what is an asset? An asset is a resource at the company disposal that will produce future benefits for an organization. The liability instead is a future obligation. That's what it means, liability, future obligations. While equity is money that is endowed in the business by any shareholder, and the equity is going to entitle the so-called shareholder to get the percentage of the profits produced by any organization. Let me show you a real-life example here. Let's assume that you're going to open an ice cream shop. In order for you to do that, the first thing that you want to do is to buy the ice cream machine. Now, the ice cream machine is going to cost you $10,000. And on the left side of our equation, the asset side, we answer to one simple question that is actually what. In other words, this side of the equation tells us what resources has the company at its disposal for a certain period of time. If then we want to answer to the question how, so how did we get the resources to buy those assets, we have to look on the right side of our equation, to the liability and equity. In other words, we want to know how we're going to be able to acquire this asset. In our specific case, we want to know how and where we're going to find the $10,000 to buy this asset. Let's assume that we have in our pocket $3,000 and that we are going to use this $3,000 to buy the ice cream machine. This $3,000 will be classified as equity. On the other hand, let's assume that the remaining $7,000 we borrow it from the bank, and that's why this one is going to be a liability, since in the future we're going to have to pay back this amount of money plus the interest. And that's why our accounting equation is completed here. Indeed, $10,000 of our machine has been acquired through $7,000 of liability and $3,000 of equity. Now, if in the real world there are many ways in which you can get the money to buy your assets, in the accounting world those are classified in two ways, either liability or equity. That is how the accounting equation works, and the accounting equation is crucial because it helps us to build the balance sheet. Actually, the balance sheet, which is one of the main financial statements that shows the financial position of an organization, it's a clear display of the accounting equation. Indeed, under the balance sheet, you're going to find two main sections. The first one is going to be your asset section, and the second one is going to be your liability and equity section. Now, the reason why the balance sheet is called balance sheet is because it has to balance. In other words, your asset section must always balance and be equal to your liability plus equity. So they always must be equal and therefore show a zero difference, because in the moment in which the asset number is going to be different from your liability and equity section, it means that there is a problem and your balance sheet needs to be fixed.